Hi there, I'm Ross Woodfield. Welcome to Black Oil Global's daily market update. Starting off in Japan, and the yen had a weak start to the Asian session. Japanese CPI figures were released a short time ago and returned disappointing results. Headline CPI fell from 0.2% to 0% year on year, and the Tokyo core CPI remained deflationary at negative 0.2% year on year. The troubles for the yen were exacerbated by a poor household spending result at negative 0.4% year on year, down from 2.9% last month. The Bank of Japan will be concerned by these results, and we could see them hint at stimulus when they meet later on today. Taking a look at the US dollar now, and it had some mixed data out overnight, which will not help the Federal Reserve at all in their efforts to raise rates this year. US unemployment claims came in at 260k, slightly better than expected, the expected 264k, but that was as good as it got. The US GDP fell sharply from an annualised rate of 3.9% to just 1.5% quarter on quarter. The GDP price index, which measures underlying inflation, also followed suit, falling from 2.1% to 1.2% quarter on quarter. Pending home sales figures rounded out the disappointing data, falling to negative 2.3% month on month. Moving on now to the Kiwi dollar, and it has been active in trading today thanks to a solid business confidence result, which lifted to 10.5 from negative 18.9. The Kiwi dollar is still benefiting from the RBNZ not cutting interest rates, as some had been expecting. The Kiwi dollar could get a boost over the weekend if the mighty All Blacks beat their old rivals Australia to win the Rugby World Cup. And finally today, our analyst pick is the euro. The pair has been decidedly bearish as optimism returns to the US dollar. We have seen a pullback overnight, but that has been met with firm resistance just short of the $1.10 handle, and from here we expect it to drift back to the recent lows. That's all we have time for today. For Black Oil Global, I'm Ross Woodfield. Thanks for watching, and go the All Blacks.